Yo, welcome back to the channel. We got another trade recap. So today I took longs over on M&Q per usual, but today I just went ahead and took it over on my practice account because if you see right here, it locked me out of my combine because I was messing with the max trades per week, and if y'all use Top X, you know how if it locks you out, you literally can't do anything. You have to wait until this goes away. So I didn't overtrade or anything. I was messing with the settings and I accidentally kind of locked myself out. So, but I'm very glad I did, and then I took this trade over on my practice account because as you can see right here, I lost $480 today. And like I said, it's on a practice account, so I don't really care. It's just a lesson. But we'll go ahead and go over how I lost that money. So, heading on over to TradingView. Coming into pre-market, we can see that we are bearish because we have a lower low, a lower high, another lower low. We broke highs, but this was a news candle, so I expected that. And we got another low, then we got a lower low, lower high, lower low. Then we continue selling off, coming into market open, and I suspected that we were coming down here to take out this. What was this? This internal Asia liquidity, which we did end up doing. Right there, you can barely see it, but we did take it out, and buyers started stepping in pretty nice, so I knew that the liquidity sweep had worked out. So going on to the next candles, we inverse this fair value gap, and actually let me back up. All right, so here you can see we have a fair value gap. If we measure this candle, it is 99.25 points on the 5-minute time frame, which is more than double of what the minimum for it to be is, because like I said in the last video, the bigger the fair value gap candle is, the more orders that are lying in between here that the market is going to want to come up and fill or go down and fill. So moving on to the next candle, we can see that we inversed it, and we had some pretty good buying pressure, and I went ahead and I think I entered on this candle, pretty sure. Let me check. Yeah, 950. But yeah, I entered on this candle because, like I said, we had good buying pressure. So I went ahead and entered 6 micros on this because it's a 150K practice count. So you have a like $5,000 maximum loss, so you can size a bit heavier. But I went ahead and entered, set my stop at about 40 points because, like I said in the other videos, we are in the Trump markets and tariffs and all that, so it's a bit unpredictable of what can happen. So I was just trying to give the trade a little bit more breathing room. But I set my stop at 40 points. Had my take profit up here because I didn't really honestly, I kind of just put it at this low liquidity, not for any specific reason, but so we went ahead and inverse this gap with good buying pressure. So I was pretty confident in this playing out. And going into the next candles, you can see that this next candle actually did stop me out right there. And I was relatively confused on why that happened because, like I said, we had a liquidity sweep, we inversed this fair value gap with really good we had a shift in the market structure too, and we inversed this fair value gap, good pressure. It's a really valid fair value gap, and I got stopped out. So I was really confused on why. And I quickly did realize my mistake. So heading on over to ES, for those of you this heads into more of the SMT that I wanted to get into, talking about SMT divergence. So for those of you that don't know, ES and the Nasdaq, the SP 500 and the Nasdaq correlate with each other. So they are pretty much, it's not 100%, but it's like 80% of the time, something like that. Majority of the time, they flow in the same, they have the same flow of price action. So as you can see right here, this internal liquidity right there on ES, we actually came up and swept it at 950, and I entered this trade on M&Q at 950, and I did not realize this. So when this happens, majority of the time what's going to happen is if one pair, like the Nasdaq or ES in this case, sweeps liquidity and the other one doesn't, then if this pair starts going down and reversing, this pair is most likely going to do that too without even hitting liquidity, which is exactly what we did in this case. So you can see we just keep dumping down, and that was my mistake. So yeah, most of the time I have both of I have M&Q and MES pulled up at the same time. I don't really know why. I think I actually did. I just wasn't paying attention to ES for some reason because this setup formed right off market open, so I was pretty distracted. Plus, I do take these setups in class, so it's not the best environment to be in. It's pretty distracting. But yeah, for those of you that do want to start looking out for SMT divergence, it's definitely pretty helpful to know to not have situations like this, or you can even take entries. Use this as a confluence. Not really an entry, but you can use it as a confluence. I would definitely say it's very useful. But yeah, I didn't really make any other mistakes besides that, and I'm pretty glad because that was a technical mistake, so it's a lot easier to overcome compared to a mental mistake. Those are a lot more hard to come by or get over. Sorry, but yeah, I am pretty glad that my combine got locked out because I would have taken that on my combine and I would have lost. But yeah, I won every day this week. I'm up probably almost like 600 on the week. It's nothing insane, but I'm not sizing too heavy on my combine. So yeah, that is going to be the trade review. If you guys have any suggestions or words of wisdom, any videos you guys want to see in the future, then put them down in the comments, and I'll see you on the next one. Peace.